if you're a new entrepreneur and you're willing to hustle and you're willing to do a good job, it's awesome because you can now just take the remnants of what those people have left behind, and that can be your base for starting your own business. What's going on, guys? Welcome to Collecting Keys. I'm your host, Mike DeHaan, here with Dan Austin and Dylan Cook. And this is our last episode for the year for 2025. And to round things out, people typically do like a review of the year, talk about whatever. We're kind of doing that, but we're going to mix it up a little bit because we are going to do what is called high-low buffalo. And basically, we are going to do round robin style. If you guys listened to our hot takes episode a couple months ago, which was super popular, it's #1 episode of the year, you should go and check that out. But basically, we each came with hot takes. We went around, basically said what our hot takes were and had a discussion. With this, we're going to do the similar format where we are going to have a high for the year, low for the year, and then a buffalo, which is a kind of unexpected thing for you for the year. And we will share those, and then we will have a discussion, and then we'll just sort of see where things go. And so if you enjoy this format, hit me up on Instagram at Mike_invest. Let me know your high-low buffalo. I always like to see what other people have queued into. And it's always a great way to sort of like wrap things up while keeping it a little bit more, streamlined, right? Instead of being like super, super broad. Cool. So you guys ready?
So ready.
Ready? All right. So I guess for simplicity, I will start. Then we'll have Dan. Then we'll have Dylan. Sound good?
Sounds good.
All right. But for me, that's like left or right on the screen. I don't know how it is for you, but that'll keep it straight. All right. So cool. To start off, I will say my high for the year 2025, and depending on who you're talking to, this could be a high or a low. Dan. No. My high for the year is the consolidation of small business owners, and the fact that the economy has shifted enough that all the people that are bad business owners, bad entrepreneurs, are finally going away, right? And for me, this is a high because I consider myself to be a decent business owner. We've had enough seasons now since I started being an entrepreneur in 2018 that I feel confident I know how to make money. And one of the things that has been the most, I'll say infuriating, most challenging things coming out of 2021 is so many people were propped up by the economy through that period of time that like any idiot could make money. Right. And there was so many businesses that were there that were taking market share, like even if it was a little bit, that were doing bad business practices, that were making industries look generally poor, that were completely just surviving off of low interest rates, the way that the economy currently was. And those people are finally starting to go away. And I think that if you're an established business owner, that's awesome because you can now just take up their scraps and you can add them to yours. Or if you're a new entrepreneur and you're willing to hustle and you're willing to do a good job, it's awesome because you can now just take the remnants of what those people have left behind, and that can be your base for starting your own business. And you no longer are going to have to compete with all the other newbies that don't quite have the hustle that you do. So for me, the high for the year 2025, I was going to say is just for small business in general. And if you are a true small business owner and a hustler, yeah, I like small business. I don't really like corporations, but I think it was a great year in 2025 for those people. And that was definitely my high for the year.
Interesting take, interesting point of view. So you reveled in people's failure.
That's what I said. It might be controversial. Might be controversial, but here's the thing, like about me just as a person. I like to win more than I hate losing. Does that make sense?
Yeah.
And so like if other people like beat me by like legitimately being better, that's fine. Like I'm not like, when I growing up, I played sports. I was like, that team was like just way better than us. They kicked their ass. Like that never really bothered me. But in the case that I would like beat those people, or there's people that are like better, right? Or people that are worse that like think they can compete, when we like overcome them, that gets me fired up. Yeah. I like people to know their place and to win.
Yeah. Wow.
It's like perfectly, the meme that's like perfectly sums this up is like the kid who's like trying to dunk a basketball. It says like me thinking I'm good at real estate investing, and then underneath the dad that's holding him is just inflation.
Exactly.
Yeah.
Well, and the thing is different groups and stuff that we've been involved in over the past couple of years, they have just been full of people that have no business being there. And the thing that's been so challenging is you're trying to network, you're trying to do all these different things like to expand your business, expand your knowledge. And it was so hard to dig through the bullshit because there was so many people that were adamant that they were smart, even though as soon as you got their story, you knew they were lucky, right? Like, you know, just like you were an English teacher in Boise, Idaho, who just happened to own 4 homes that quadrupled in value. And yes, you are worth $3 million, but that doesn't make you an entrepreneur, right? That was your Bitcoin that you bought for $1,000, and now you're fucking rich. Good job.
Yeah,
right?
the flip side of like that other piece too, on the high side of like the positivity, is you can really see it within GoBundance, because when the last event I went to, there's the events are probably what 400 people now, 350, so decently sized for a group that has 1,000 members in it. It's really hard to not bump into very, very good operators.
Yeah, because all that's left.
Yeah, I can't remember his name. I forgot. He's not a listener, so it doesn't matter. But I sat next to, just randomly at dinner, a guy that owns like a restaurant, like business empire, kind of on the East Coast, and his goal is to get to 100 million a year. And I think he's at, I don't know, a couple 10 to 20 million a year in his restaurant. But like, what? Like
in a restaurant.
In a restaurant, right? So like, and then I bumped into quite a few other guys where it used to be you were running into so many syndicators and people that were riding the wave, and those guys have since left. And I think this, not just GoBundance, I think this is probably a lot of groups like this. And we also see a lot of those real estate groups just pittered out. They're gone. They don't exist anymore. And so it's kind of, it makes masterminding a little bit better. A little bit more quality. So if you are operating or you are trying to aspire, there's no better time to do it now, because all the bullshit's gone, and the guys that are out there and the gals that are out there are actually doing well, and it's not a lie.
I think right now is the epitome of, you know, be greedy when there's blood in the streets. Like we are on that phase. From an investment standpoint, there's still some potential downside risk, but I think from a business standpoint, it is absolutely the time to be pushing into small business, because there's so much opportunity there. So that was my high, is an opening up of opportunity. And I guess my high, as Dan, you would say, it was the downfall of all the schmucks.
All the schmucks. Ooh, I like that word.
I like that word too. It has a bunch of consonants right in a row.
Yeah, it does.
It's exhilarating.
Yeah. It's fun to say. I'm going to teach my son that.
There you go.
He comes up with some wild words. I'm like, that's a good word, dude. Nice.
Yeah.
Where'd you come up with that? You know, but you know what? Peppa Pig, because they have a lot more proper English too. He speaks probably better than I do.
Probably.
So
cool.
All
right, Dan, let's hear it.
Okay. So mine's a little bit more personal, but it bleeds into the business, and I will the high is going to be a single point in time, but it's actually the whole year of what happened for that point in time. So I took a trip earlier in the year to Salt Lake with a couple of friends of mine who I met through GoBundance. If you are a GoBundance person and you're listening, it's my GoPod, and we've been together. Golly, what do you think, Mike? Like 2 years now with this GoPod? Maybe it's been my best, most significant GoPod so far out of the 5 or so I've been on. But anyways, took a trip to Salt Lake City. Put ourselves in an Airbnb down there, and I don't think we did anything else but mastermind. And we obviously left to eat and have some drinks and all that sort of stuff. And we talked about individual goals and things, and really the result of that. And I'll give a shout out to my guys, Brandon and Aaron, who are listening. I'm sure they're listening, that this was a significant event, and they know it was, because they've brought it up several times, is all the things in my current life that I need to quit doing or fire, like get rid of, right? Just being so busy with all sorts of other stuff. And at that point in time, we knew that the lending business was probably the business Mike and I were going to really shift into, because we really started that approach, I would say, the end of last year. And so that being said, fast forwarding to now, having quit so many different things, fired so many different things. I mean, there's lots we sold our wholesaling business, which is a big piece of that, letting go of partners, letting go of employees, all sorts of things that we did and have really set us up for success. Like that point in time in Salt Lake was a pivotal moment. And honestly, I can look back and all the things that, you know, Aaron and Brandon gave me advice on have happened, have taken place. And I think a lot of that is having people behind you, like rooting for you and seeing the bullshit from the outside and telling you like, hey, you need to fucking look at that. Yeah. Or you need to focus on that, pay attention. So that was a huge high. And I think it took our business from, you know, where we were at, like, hey, this is our thing, to now we're like, yeah, this is definitely our thing. We're going into 2026 with a really high capacity to double, if not triple, our revenue in the business. And we've already, I don't even know what we've quadrupled, tripled how many times month over month with that business. So my high is having a group of dudes I could go to Salt Lake City with and completely change our business.
Yeah. And it's funny because I remember when you came back from that, and I could tell that you had like a new fire, which was pretty good because you were definitely pretty jaded from especially the wholesale stuff before that. Yeah. But funnily enough, I still remember how hard of a decision it was for us to exit the wholesaling and flipping business, because that had been our identity for 5 years, 100%. And sometimes those changes, even though they're so obvious is what you need to do, if you're still kind of like holding on to like, there's like a sunk cost bias or like an identity bias, if that's a thing, I don't know what that is. Sure. Then it's really, really hard to move away from it, even though everyone is telling you that. Right. Totally. But no, it was a good change. And I'm glad I made the cut with your big life changes.
You did. You're still here. But I mean, there was a lot. I mean, I don't want to list all the things off. There's people involved in that. There's businesses involved in that. There's relationships, all that sort of stuff. And
it sounds like, Dan, that you just had a good version of clarity of what the next 6, 12, 18 months look like.
Yeah. 100%. Yeah. And they helped peel it back, because it's like, okay, this is what you're saying. Now these are the things you need to start doing. And then to back it up with that too, is this was reinforced from that point in time. I mean, we went to Scottsdale together. We went to Dallas. We went to Calgary together as like a group. And it was like this constant repeat of like, okay, where are you at? Checking in. Are these things working? Okay, why haven't you done that yet? And I would just close this out with, as we go into the new year, if you're not happy with where you're at, if you don't have at least 2 to 3 people that you can talk to and set goals with, have fun with, not just business people, but also have fun with, and be able to tell like your goals and talk through candidly about shit that sucks. And they're literally just there on the sidelines listening, and like your wins are their wins, your losses are their losses. Like, you're missing out, and you should definitely go seek that.
Totally. Yep. Yeah. Great one.
Cool.
Better than any paid mastermind you can be part of is somebody that you can, likely 2 or 3 people advising you, I think is helpful.
Yeah. But I think the key thing though, just on that really quick, and then we'll go to Dylan, you took action. Because I also think a lot of dudes end up in these like circle jerk groups where they sit around and they talk about ideas, and they talk about like, well, my life would be better if I did this. And then they just go back to their everyday life and don't change anything. Right. You took a lot of action when you came back from that. And so that's the most key part there.
Yeah. It can be mental masturbation for a lot of people, for sure.
Yeah.
All right, Dilly.
Cool. Yeah, no, I also kept my high, I guess, a little bit more personal and like business related. And I said publicly on the podcast that the beginning of this year, the goal is $1 million in top line revenue. And did we hit that this year? No, we did not. But I'm still happy with where the business is and where it's at. So we did increase revenue by 30%. And even better than that is we increased like the bottom line by about 40%.
That's amazing.
And so it was just I made a lot more money. I worked a lot less. And even on the rental side of things, like we are technically at that tier 1, like financial freedom, just from the rentals we bought over 3 years. Like, I've only done this for 3 years, and what my balance sheet looked like 3 years ago to what it looks today is a very, very different story. And it was just like a combination of sitting down and reflecting, but like, this was a lot of hard work, but at least I can see the fruits of that labor now.
Yeah. That's awesome.
That's amazing, dude.
Yeah. It's funny. I always forget you've only been doing this for 3 years. I feel like you've been doing it for so much longer.
That's crazy.
Now I left in the November of 2021 is when I left my job. So I guess technically, but I didn't do my first deal until 2022.
Yeah, that's great.
Really?
Yeah, that's super quick turnaround.
Yeah.
And you'll reach because I started doing real estate in 2018. So this was like my 7th year, but I didn't really start wholesaling until like 2020. Yeah. So you'll start to reach the phase though now where you get like that consistent like big win, and that's when you get like a lot more confidence. I would say it'll sort of take like bigger risks and those sort of things, because not only do you have the assets, but you also have like the recurring income, right? Mm-hmm. And like the level 1 financial freedom is cool, but then you're like, but I also am confident that I can make $500,000 this year.
Yeah.
So I don't care about that as much.
Yeah. And that's really totally true, but it's more like a security blanket,
for sure. Yeah. But nice, man. It's a good one.
Yeah, that's incredible too. I would add to that ask to that is for people that have been doing it 3 years, what do you think made you different or unique compared to somebody who's doing it 3 years now, or 2 years, or even in their first year, and they're just like, man, I'm hoping to pay my bills this year? Because every one of the Dylans, there's 100 people like that.
it's a loaded question. I would say am not and have never been afraid to work very long days and very long time.
Yeah.
And I wasn't afraid to ask. Like, I paid for CCF right when we first started. I paid for Scale right when we first started. I didn't start with starting from scratch. I kind of started with a leg up because I paid for the people who were already successful to teach me what they were doing, and just executed. You know, I guess I went to a whole ton of meetups. You know, at the beginning, I knew everybody in town. So a combination of just, it's cliche, hard work and learning from people who are already successful and being a shameless cloner.
Yeah, and I would say one thing that you've also got, Dylan, is taking imperfect action. You're one of the few people that I've met, like, you'll come on here and after the show, you'll ask us some questions. And next thing you know, you're doing it like that day.
Yeah.
Right? Like
It's true.
Yeah. Whereas I can't tell you how many people over the years have asked questions around stuff. And I tell them very blankly what we do. And then I see them like 2 months later posting
asking
on Facebook,
the same question,
asking the same question to like general people. I'm like, why the fuck didn't you do it 2 months ago, dude? Like, that's why you're not successful.
That's a learned skill. Having a default to action is a learned skill. And actually, when we went to Scottsdale at the first KeysCon, and you guys asked for feedback, that was my number one thing. That's different than a lot of stuff. Is the whole thing was a default to action. Like, you had to do shit. You can't just think about it. So
yeah. I want to summarize those three things too, because it's in my head. As far as it's actually quite simple. One is being willing to work, and people want to get into be entrepreneurships because they think they don't have a boss, they don't have to work very hard. It's like, no, you got to work way harder, but it's way more fruitful, way more satisfying. Second is what I would have used to say is be willing to pay to go faster, which I think is still relevant, but I think it's in a different phrasing right now. I would put it as recognize you don't have to do it all yourself. You can go and learn it. You don't have to learn and build it yourself. You can go and have somebody and take their shit and replicate it. As Matt King from GoBundance says, rip off and duplicate. I think you got to be willing to do that. And then the last one is brand. And I think that's actually more relevant than anything right now. Mike and I were just talking about this, about one of the dudes here locally who left the company he worked for, a wholesale company, and has done extremely well for himself. And it's all because of brand. It's all because of the meetups. It's all because he was out there on social media. So however you become a known quantity in your real estate community, doesn't matter which way you do it, whether it's social media or in person or just calling people, like that is going to make you more successful than most anything. Because you pair that with hard work, you won't have an income issue.
Yeah, totally.
Cool. All right. Wow. We'll jump into the lows. All right. So my low for the year, again, it's going kind of macro. Sorry, I went with a lot of mine. My low for the year 2025 in the space was the rise of co-living as like the new fad. I
thought it's already dead though.
No, dude.
No,
well, it's going to be soon because now Pace is talking about it, right?
Oh, no.
And as soon as like the big gurus start promoting it, you know it's too late.
It's too late.
So it's funny. I was really trying to think about the different stuff, and every year there's like a new fad. This fad in particular, I really, really hate for two reasons. And it's kind of funny because on the show from last week, we talked about like the density piece, and I think that's really important. And co-living is like an answer to that at some level, right? And so the reason I hate co-living as like this new fad, and I think it's the low for the year, is basically two parts. So the first is because basically I think the rise of co-living is like society's acceptance of, or like the real estate investor, like small real estate investors' acceptance of how challenging density is. And so they are now doing what a capitalistic society does, is they are finding a way to monetize solving the problem. Okay. And so instead of the cities and like the infrastructure being built to have this density, you now have all these capitalist entrepreneurs, which is great, go out and buy these oversized houses and hack them up into these weird 9-10 bedroom monstrosities with 8x8 bedrooms that are built into the garages and the basements and the attics and the fucking shed and wherever else. Right. And that's where they're going to have is density. And so I hate the fact that that has been the result of the systemic issue that we've had with density. Right. The second reason, this is probably my least favorite real estate fad that's come around since we've been discussing these kind of things, is because not only is it like, I don't think it's viable over like a long-term strategy. The problem is it also leaves the asset in a state that I think is now majorly less valuable than it was before. Right. And so if you look at like the sub-2s and the Airbnbs and, you know, the midterm rentals, all the other stuff that people have had as like their current get rich scheme, None of them have affected the hard asset as much as co-living. And so I guarantee you, if you fast forward 5 years from now, just like we're seeing the purge of all the Airbnb owners rapidly trying to sell their properties at like a massive loss, right? Because they overpaid for them, they traded them on cap rates, all sort of stuff because of Airbnb potential. We're going to see the same thing with the co-living investors. The problem is that nice house on a cul-de-sac that they cut up and put 11 bedrooms in, right? That they had a mix of like battered women living in there with like their children and crackheads. And then like the one college student who couldn't afford to go anywhere, who had this weird community, right? And they all just did like janky stuff in the property. No one is going to want to buy that house anymore. And they're going to go into it. It's going to be full of unpermitted work. It's going to be full of like a bunch of like weird damage and stuff that was set up in a way that doesn't make it conducive to pivot back to an actual usable structure for where it's located, right? And I think that just long term, it will have a pretty major detriment on the neighborhoods where that's common, and every time you talk to these people, they always have like this, I don't know, illusion of grandeur of what these tenant structures look like. They'll be like, oh yeah, they always describe it like a tech incubator, where you have like all these like young buck entrepreneurs who don't mind they have to share a kitchen
or a fun hostel.
And like, maybe if you're like in San Francisco or Austin, when you're in most metros in the United States, that's not what it is. Right. It is a halfway house that is full of people that cannot afford to pay rent anywhere else. Right. And then you're putting them in communities that are surrounded by families, and then you're completely screwing up the asset in the meantime.
So let me ask you this. Let me ask you this. Great low, by the way. I can't agree more. I think the idea of co-living is garbage. And I just think it's terrible for the community. Now, from a real estate investor standpoint, because I also think that co-living, as it's typically described, is a poor investment. Yes. And it's just not a good, it's a way for non-deal finders to somehow buy a deal that cash flows. But by the way, if you try to do that at scale, you're not going to be able to get the great financing you want because they're going to go off market rents. But it's neither here nor there. My question is about these actual halfway houses that are like for people coming out of rehab and they have court ordered, like you got to go to a halfway house, or like developmentally disabled adults. Like we have some of these similar. I'm not going to say it's the same, but you have these scenarios where they are placing adults in homes for whatever reason. Would you consider that the same as co-living, like on a commercial, like more of a commercial lease setup?
I would say it depends, right? Like it fully depends on the scenario and how legit it's being operated. Because you've seen
the location, right?
And
that's
the
like
location.
A suburb.
For sure. Well, I mean, you'll see people that like have these addict houses they're putting in like nice neighborhoods because it's the one that hit their square footage requirement, right?
Sure.
Like I don't think that you should necessarily be doing things like that. I do acknowledge that those situations do need to exist. I think it just needs to be run by a legitimate operator, right? Because also what you will see some of these people that have these halfway houses, the sober living houses, whatever. And they always have like, oh, well, so-and-so has a company that does this. He makes so much money from insurance. So, but that guy's a fucking crook. And those houses all turn into meth houses, right? Like, is that the reality? Or is he actually run like a clean business where they make sure that these dudes could be women too, I guess. Probably not. That would be weird. I feel like they would be gender specific, but like the people that go into these houses are actually following the rules they make sure they're clean. They make sure they're safe. The neighborhood knows what's going on. I generally, when it comes to real estate, I think if you are having to do things with some sort of like secrecy, right? Because and you're not doing a secret
leases with 1% LLC ownerships.
Exactly. When you're doing stuff like that because it's hokey, right? That means you shouldn't be doing it in general.
So that's just great rule of thumb.
Yes,
that's a great rule of thumb. If you're having to make loopholes because you can't do what the city or the local zoning says, I asked that question too because it seems like there is a use case for affordable housing and for affordable living, but within the confines of the actual zoning of the city. Because if you are running a business, you need to get a business license. That's what's happened to a lot of Airbnb owners. They had to get a business license, and then then the city can control it. Right? With these, you're trying to do these weird things. I mean, you might be putting a child molester in a home a block away from a school, right? Or something, you know what I mean? You're doing it under a weird LLC, so their name doesn't even pop up on the registry. Like just weird stuff. That's just not okay. Same thing goes with like these, I don't know. I'm just going to use halfway house, but houses where, people come out of prison or rehab and they have to be state mandated to be here. Like you're putting in a neighborhood where there's kids and maybe there's there's violent crimes and issues. Like, come on, dude. Like the government's not going to want that. So you're skidding around the rules and allowing it. You're making it, it's a bad business.
A lot of city ordinances around here have made Airbnbs get hotel licenses, which is like 15% off top line revenue.
Oh, damn.
And that killed a lot of, profitability. But
Yeah.
Resort fees.
I'm surprised Mike's wasn't going to be the downfall of gurus, but I guess they're still kind of
that already happened, I think.
Yeah.
Well, so I actually thought about making that my high, but the problem is most of the gurus that I really don't like are still running strong. They just have their new grift.
Yeah, they do. Yeah, that's funny.
So all right, we got to move on.
Yep.
All right, cool. Okay, so I didn't realize it, but my low starts out as somewhat more personal. I've intended it more macro. And when you get interviewed and they ask you what your strengths and weaknesses are, and you're like, well, my weakness is actually my strength. This is kind of that.
Great. Let's go.
This is kind of that. So I was thinking about this because I actually am pretty optimistic. I was like struggling to be like, what was an actual low that's like worth talking about? And this one, I think a lot of people can, identify with. So in the beginning of the year, so say the first half of the year, watching my net worth go down, if you actually like mark down your assets and things like that, are honest about it, right? Watching that go down and struggling to be like, why the hell can't I make it go up? Because there was no clear path to adding assets with real estate. Dylan, you've obviously added quite a few assets, but for Mike and I, it just in our market,
different market,
it wasn't adding up. And part of this, I think, is it helped me realize how bad actually 2024 was as a year, from a financial standpoint, and a real estate standpoint. Real estate more than like the macro market. I'm not talking, S&P 500. I'm talking just generally speaking. And it helped me recognize how much of my net worth was wrapped up in real estate to be able to say, oh man, it's going down. And if I have to sell it, I'm really down 10% more. Like, there's also recognition that the paper net worth doesn't matter that much, but it is a flywheel that helps you get more money. Let's be honest. The more net worth you have, the easier it is to do things because you can go to banks, you can do other things. The flip side of this is, but this year, 2025, which most people I think would say from a headline standpoint is like a much more difficult year, has been a huge increase in cash flow to my personal growth. And I have wanted to add cash reserves, but cash flow has gone up significantly this year for 2024. I'm guessing my taxes will be significantly higher this year than they were next year, which is honestly a little bit of the counter argument I would expect to hear.
Yeah.
And it actually goes a little bit, ties into your high a little bit, Mike, of seeing these small businesses and things like that kind of going away. And I think being able to operate a business with quality in this environment, this is where you get to be greedy. And so cash flow has gone, way up significantly. Real estate is just there and it's existing and it's not adding to my wealth. And I guarantee a lot of people can identify with this. And I bring it up too, because like you need to be balanced still. Like if you're one of those dudes that is like 100% real estate, that it's just not valuable. Like you shouldn't do that. Like you don't want to diversify to like the nth degree, because I think you lose a lot by not being an expert in one area. But we've talked about this a lot on the show. If you're just paper net worth real estate guy, no cash flow, that sucks. It sucks for you. I'm not sorry because you did that to yourself.
Yeah, that's why we used to have the whole saying massive income before passive income, right? Because that's the one thing that will allow you to actually grow. Right. It's not holding assets, it's having the ability to buy more assets.
Yes, and the ability to be flexible when the market so you can be greedy. Because if you just have no cash flow, if you're the FIRE person that is using real estate as your financial independence, retire early, and that's your cash flow, we all know it's not that great of cash flow if you have one event. Now the market's kind of sinking, so you can't get leverage easily on your assets when it's real estate specifically. Dylan said it earlier in the show, his bottom line went up 40%. He's increasing cash flow. And fortunately, while you're doing it, you're able to increase your assets too, Dylan, but not everybody gets to be the double header like that. But either way, you gotta have cash flow.
So I guess you went from a low to like a high.
Mm-hmm.
So
exactly. I told you.
Yeah, you said
strength. My weakness is my strength.
Yeah. So I'm saying, just to put it into words, your low for you for the year was the good portion of the year where you were struggling with the decline in your portfolio and you didn't really know how to overcome it. But since then it's recovered.
Yeah, I would.
It's
I would say
recovered in another bucket.
In another
Yeah,
bucket.
the low was like the struggle at the beginning of the year, recognizing which was honestly I think more of a 2024 a byproduct of 2024 market being so bad for real estate bleeding into 2025, because I actually don't think the real estate market is that bad. I don't think it's as plentiful, but I think, and we're seeing in the lending business, there's still people out there doing deals. They're just different deals.
Yeah,
and they're different people.
Yeah, a lot of different people. Honestly, it's pretty wild. But cool. All right, good one. Let's hear it, Dylan.
Yeah, I'll do two. One, I'll keep the personal side is, even though it's been a great 3 years, the past like quarter has been one of the toughest that I've had since business started, both from this deal flow and contractor problems, building problems, a lot of CapEx stuff, like just this like a kick in the nuts again and again and again without a lot of wins. But the second thing that's probably more important out of, all the stuff I read and listen to about like the macro economy, where I think it's going forward is I still kind of resonate with like the blue collar middle class guy. That's how I grew up. That's where like the town I'm from. And I don't see a path that's good for that general population, like in the next 5 to 10 years. And that just kind of makes me sad. I don't know how to fix it. But
you mean for the middle class?
Yeah, I think it's going to be one, affordability is going to continue to be a problem. And I think that there will be still a reduction in the middle class. I still think we have this K-shaped economy, and I just don't see how that changes with any kind of volatile event or volatile events, plural.
You know who can change that? Whoever the next presidential candidate is.
I would disagree with that.
They'll be able to fix that.
That's what their platform's going to be for sure.
Whatever they say, affordability is going to be to be talked about a lot.
God. Yeah, and I don't know. My social media.
Can I bet on that?
Yeah.
How many times are they going to say affordability?
Yeah.
No shit.
My timeline, I think, is just filled with like, I don't know, like I see people my age or who I went to high school with, maybe that blame the system, which sure, there's some truth to that. But again, it's not the past 4 years. It's not the past 8 years. It's past 3 decades, 4 decades of decisions that are coming to a head. And I just kind of, if you just sit down and think about it, it's like, well, this isn't really good for anybody besides the people who already have money, even though I am probably in that class. So,
yeah, that's a good one.
So,
yeah,
are you short on mankind? Are you short on America? What are you short on here?
No, I'm not, I guess, short on that. I guess if I had to put it in words, it'd be, it's going to be short-term volatile. We'll probably, see an increase in populism, an increase in this infighting.
Yeah.
But eventually, there will be a turn. I don't know if anyone's familiar with the fourth turning concept. It's a book by a demographer that a lot of people use. But basically, you go from the fourth turning is the bad part that happen every 80 to 100 years. But after that, you have the first turning, and that is like usually a time of prosperity. So,
so we gotta lose some to make some.
Yeah, pretty much.
So that means you probably want to have productive assets. Would that make sense?
Productive assets, hard assets. I mean, there's no, if you're thinking 50,000 foot view with our current debt situation, getting off track, it's like, there's no way they don't inflate away the debt, meaning they don't just continue to print money. And what do you do when you print money? You really don't want to own fixed income. You don't want to own 30-year treasuries, 20-year treasuries, because your purchasing power is just going down. You want to own things like real estate, high value, probably dividend stocks. In fact, fun fact is value foreign entities, so the stocks in other countries, Brazil, Argentina, have outperformed the S&P by 40% in 2025.
All right, last round, Buffalo, and this one was the hardest one because nothing really surprises me anymore. Just how
you're jaded.
So much, dude. I'm so jaded. Literally, it's fucking nuts. But so my Buffalo for this year, thing that I really did not expect was, I was trying to think of the way to do this. I feel like collapse is like a little bit of a harsh word. I would say the massive consolidation of the effectiveness of marketing for finding deals, like off-market deals. And this is, so if you go back to the past, basically for as long as we've been trying to find off-market real estate deals, right? There was always different marketing channels that you could pull. You could call, you could text, you could run ads, you could send mail, you could door knocking, whatever. It's been getting tighter and tighter the past couple of years. I feel like this year in particular, we've reached a phase where in so many markets, almost every option seems to either not work that effectively anymore, or you have to do it such a mass scale that it's no longer really effective for people that aren't already established. And the buffalo for me with that is like, if I was to look at a year ago, I would have figured that stuff would have been more effective because we have more financial hardship. We have more people that are running out of cash and need to sell their homes. But I think that there is this sort of, crash that we've had where we've had the people with no money who also have nowhere to go, also combined with this, I would say, like mass rejection of like home buyers or like hedge funds or whatever. So like people are so resistant to selling their homes to investors. They're resistant to responding to marketing from companies, right? They don't really know what their next steps are going to be. And if you'd asked me a year ago, if I looked forward, if I thought that pretty much every marketing channel was going to be majorly suffering, I would have not believed you. Because I've always been of the opinion that in that sort of space that you could basically spend your way out of anything if you got more lead gen. But I mean, just a couple of weeks ago, we had somebody on our Scale Weekly call that said that they had, in the last 2 months, they had spent two $17,000 drops on direct mail and had 0 calls. Unheard of. Unbelievable that happened, right? But we're starting to see that more, right? And that's just the situation. And so I would say like the buffalo is that we know there's the blood in the streets. It's just not responding. To the opportunity that would have expected to be there for real estate people.
The return on ad spend, after talking to dozens of operators, I feel like maybe the past 2 years has been anywhere from 5 to 7, maybe a little bit lower than that. But I know when I talked to lately, 2 to 4.
Yeah.
So that's just kind of puts data to what you're just saying.
Yeah. It's got to be more than 2 if you're going to run a sizable operation of any size. Yeah, sure. If you're popping 1 or 2 off a month and you don't need a lot of income, you can get away with that. But that's like newbie startup phase, what you want. You got to have more than that.
Yeah.
So part of it, I would think, is caused by the recognition of wholesalers and off-market buyers by these sellers, paired with so many jackasses out there, gurus included, that are out there preaching unethical ways to do things because there hasn't been regulation on the industry. And now most people have a story of how they got their friend sold to somebody, a home buyer, and got price dropped at the last second, or something happened, the contract got dropped, or they wanted an inspection even though they said they wouldn't need an inspection. All the things that we all know happen out there. I think that's probably one of the big reasons for the resistance to sell.
I would think so.
One thing I've seen, resistance
to respond.
One of the things I've seen locally too is I feel like a lot of the new people have kind of got, or like the people who are just like fly by night got washed out the past 12 to 18 months. All the people left now, I mean, they're top competition. I mean, my competition here is fierce. So everyone is doing the multiple channels. Everyone's talking to the same people. Everyone has the same scripts. Everyone has the same data. So like you got to hit people at the right time seems like the most important factor right now.
Yeah. And it's funny. And that's the downside of my win with the of all the small newbies is the people that are doing well, they are much more fierce competitors than they were
coming in.
So cool. All right.
My buffalo is not personal, and it's even more macro than that. My buffalo is I did not expect Silicon Valley to all get on TRT at the same time.
There we go.
Now hear me out here.
I love this.
This is intense. Okay, it all started with Zuck, right? He did jujitsu, right? He got on the Joe Rogan bandwagon. He did jujitsu. He became friends with Trump, doing all the manless shit, right? But if you look this last year, it's kind of intense. How many of the tech companies are now getting people to come work for them? And when I say tech companies, it's all of them, but there's a rise of the new tech company, the defense tech companies, where historically tech companies have always been like, oh, we're not about war. We don't want to participate. And the people that worked for the tech companies were that way. Like a year ago, 2 years ago, you would have never thought that Meta would be involved in like building shit to go kill other people. Like that just wouldn't have been a core value you would have thought of, even if they maybe wouldn't have been a core value. But if you look at it, like you've got like Palmer Luckey, everybody's seen him with Anduril, and I can't remember what's the Eagle Eye headset. Like they're basically, these nerds are taking video games and making that shit into real life. Like now war is going to be fought in a totally different way. We're truly at the phase where people are using goggles, and I've seen it in person, what these guys are using to fly drones and kill people with them, right? Like we're at that phase. It's wild though. And I'm going to give you some more data points on this because I went down the rabbit hole on this. There's been like Meta and OpenAI and it's like Palantir and some others that you would expect because they're defense contractors, but like Meta and OpenAI had executives get brought into the army. Like they were just like, now you're a lieutenant colonel in the army. Like, and they have fucking uniforms, dude. Like an executive, like a senior executive at Meta. Like that's wild, right? They even went through like a PowerPoint basic training. Like I'm not kidding you. Like this was wild. But it's interesting because the way we're going to fight wars is going to be different. And I think it does affect the American economy and all the economies because it goes back to the whole AI race and what's important. And I don't really know how that will tie into this, but you look at the prime contractors, General Dynamics, who's another one, Raytheon, Boeing, these big companies that have basically just been raping the government for decades and decades as part of the military industrial complex. I think that will still continue and it always will. However, it might be these new guys like the Andurils, the Palantirs that take over, or they are going to partner with these big prime contractors. The big prime contractor is going to be even more mega powerful. So I don't know where it's going to go, but it's wild, dude. If you actually look at it.
So you're saying that this is a result of all of them getting on TRT?
Why they started doing jujitsu and building bombs, dude. It's wild. It's like it's an overnight change.
Yeah, it was very abrupt.
Within a 12-month period. Like it didn't seem like that way. Like Zuckerberg, during the Trump campaign was doing his jujitsu and then Trump got elected and all these guys.
He got the American flag while he's like wakeboarding behind a boat.
Yeah, like there's some wild shit going on, and I don't know what it ties to internationally and how things are going to change, but it's definitely going to change how we fight wars, which I think will completely change the geopolitical space. And it's like a new Cold War almost of some source potentially of like, now we don't actually have to send people. So why don't we, like America's been bombing people forever. It's like, that's our thing. Right. But now you're going to have like these ground forces that can just go in and virtually kill people.
Yeah. Well, I just feel a lot safer as an American knowing that we're prepared for this all-out conflict with Venezuela. I've really been concerned about that.
We need that crude oil, dog. We gotta get that oil. America.
Hey, it was our oil. They stole it.
Oil's less than 55 a barrel right now. So like you'd actually think you would want a less supply of oil, more, or the price would go down even more.
Well, so the difference is, let me inform you here that they have a different type of oil, as I found out. It's not, they call it the sweet crude, which is used for gasoline. This is used for ships and diesel, like big diesel ships.
Is that because it's in the southern hemisphere? So like it all drips down different because we have a flat Earth.
It's like
because the Earth is a disc, and so like it's all just like going.
It goes like right there. Yeah. Dude. It's the thick part of the oil. Yeah. That's where also they make baby
the
oil.
gravity changes. They got to spin it around.
Yeah. Exactly.
So, I mean, I could. Speaking of baby oil, I could have said P. Diddy was my buffalo, but everybody expected that. So
yeah, I know. No one was surprised by that either. Yeah.
Anyways,
all right,
cool.
Here, Dylan.
I guess my buffalo is kind of like I said earlier. I've never been afraid of hard work and like we're doing it. But if I sit down, I actually think I might be experiencing some level of burnout in this business.
Yeah, you're burning.
Yeah. And so I guess my buffalo is the realization that if I do this, if I'm still doing this 5 years from now, I would probably consider that a failure.
Doing it the way you're doing it or doing it period?
That's
probably doing it period, to be honest.
Yeah.
But my business is twofold. It's the active income, but I want to get the portfolio to a size where I'm still making the same amount of money, but through investments, not through active income.
Yeah.
I will say, I think there's a reason that you don't see a lot of people that have been flipping / wholesaling houses for like 10 years, right?
Yeah.
Like there will be people that have done that in the past, but and I think it's an amazing business to make your first batch of money, build your first little bit of wealth, and give you that financial freedom, that security. But it is a very emotionally and just like mentally draining business, right? Because you're constantly dealing with the dredges of society, the motivated sellers, and honestly, like flippers, the ones that you're buying your deals are no easier to work with than the sellers half the time.
Yeah, they're assholes,
right? Like they're especially the ones that are so stubborn, they're not willing to find their own deals, but they want to own you because you're the deal finder, right?
Yep.
Like, so you have a lot of hard conversations back and forth. It has huge wins. It has massive losses, right? Like, what do you, calm down over there, Dan. Put your
Sorry.
Tic Tacs away.
My phone just broke and fell over.
Yeah. It's dropping your Zyn package over there. But like, there's a reason that people tend to get burned out and exit. And I think it's just because it's a challenging business to run. And I think as you learn more about creating value and marketing and like actually what business looks like, you realize that there's easier ways to make the same amount of money plus more. Right. I mean, that's a big reason
with
that
a higher ceiling,
lending
I
business.
think.
With a higher ceiling. Totally.
Yeah.
Like that was the thing with us for the lending business is the ceiling is so much higher. It's an established industry, right? You're not like having to pick and choose the random people to come work for you because no one's ever worked in this kind of company before, right? There's like actual infrastructure behind it. It's just different, you know, and I think like that's why you see a lot of people.
I think a good example, just to put an earmark on this, is like a lead came in last night at like 8 p.m. And normally I'd be like, cool, let's check it out. Like, let's see what it is. Like, and I was just like, I'll get it in the morning. Like, and that's just a different approach to the same input that I would have had, you know, a year or 2 years ago. So,
but yeah, it's tough. I think it's a good one though. I wouldn't have expected you either because you always come in and you're always so like happy-go-lucky, ready to talk about the ways that you're growing. So
that is a good Buffalo though. I think it's a good realization that
unexpected.
A lot of people have.
Yeah. So cool.
All right, guys. Anything else you want to add?
I don't think so.
All right. Well, hope you enjoyed that, everybody. If you didn't, I don't know. Don't tune in next year. Like,
go away.
Go away. No. If you did though, you should let us know. We always like to hear from fans. People do our stuff. So send me a DM on Instagram at Mike_invests. And just let us know what you thought. Let me know what your high-low Buffalo was for 2025. And if you have any good ones, I won't share your name, but we can talk about it next time on the show. And you guys all have a great New Year's at this point because it'll be after Christmas. And we'll talk to you guys next year. Dad joke.
Nice, dude. That was a good joke, dude.
Thanks. I saved that one. Take that right out of your book. This episode is sponsored by Sir Lancelot LLC, also known as SLA Capital, which, if you didn't know, is Dan and I's private lending company. So yes, we are sponsoring our own show, but what you going to do about it? It is our private lending company that offers hard money and DSCR loans to real estate investors of all types. So you can be a new investor, an experienced investor. You can be buying flips. You can be buying rentals, whatever. We can do everything. And not only that, but the rates that we offer are just as competitive, if not cheaper, than pretty much every other company out there. So whatever big company you've been working with, bring us their term sheets and I guarantee you that we can probably beat it. We have the same connections they do. We just don't have all the overhead and middlemen. So if you want to come and check us out, go to slacapital.com/keys and I will know that you came from the show. And by seeing that you came from here, when you get to closing, you will save $500 on your first loan with us. So slacapital.com/keys, we would love to fund your next deal.